Welcome to Market Call today. I'm Morella Fernandez. Kim Bolton's on the show. He's President Portfolio Manager of Black Swan Dexteritas. He's taking your questions on technology stocks. Here's how to reach us today. You can call 1-855-326-6266 if you want to dial in toll free. You can also send us a question to marketcall@bnnbloomberg.ca. Kim, thank you very much for coming in. Let's talk about tech stocks, which have rebounded somewhat since the April fall, but haven't gone sort of as high as they were. What's your take for it? I'm sure you're going to get a lot of questions about whether or not you think they'll bounce back even more.
I actually think it's quite healthy right here because it's, it's bounced back a good 20%. You would think it might correct, but it's just consolidating, which is healthy.
So you think that they will kind of hang around here for a little while, you think?
And that's a good thing? They'll go for the new highs.
Got it. Okay, let's talk a little bit about quantum computing, which is something I know you've been interested in, and stocks in that area. But can you first explain sort of the ecosystem of quantum computing and what it actually involves?
So,
because it's a complex topic, right? And most people sort of don't understand what you do with it.
So in sort of classic computers, programming and everything is done with zeros and ones. Basically, quantum computing allows you to do zeros and ones and a whole bunch of things in between, which are called qubits, which allows it to run a lot faster and therefore do higher computational things in the computer. And so, I don't know, do we have a
we have
there we are.
We have a graphic coming up.
I'll make it quick and sweet. So this is our version of sort of the quantum computing ecosystem. So you got the bullseye, that's the hardware, and the hardware provides, the essential computational foundation needed for quantum calculations. Then the second circle is the software and algorithm development side, which basically translates the hardware capabilities into actionable software solutions. And then finally, there is the applications. This may sound familiar because it's sort of the way it works within agentic AI and robotics and so on. But basically, the application allows the deployment of those software solutions to specific industries and sectors out there.
Okay, so that's just how it's built.
Yeah.
If I were to ask you what is a practical area of quantum computing that you can give us an example of, could you do that?
Absolutely.
Just to further cement in our minds what kinds of things can be done this way, how practical it is?
Okay. So if you have qubits, it allows you to do faster and more computations. So you can imagine, I don't know, take medical data out there, and you're trying, right? So a lot of medical experimentation, that's what it is, because it's sort of a lot of test and miss. Mm-hmm. But if you can do tests and misses a lot quicker than you could before, you can shorten the time span of when you can actually find the right computation for that medical solution that you're trying to get to. Another one would be supply chain, like logistics, right? So a lot of the like DHL, AW, Amazon for the fulfillment centers, and then they have to do a whole bunch of deliveries. Well, what's the most efficient and effective way of doing that? And so quantum computing can actually tell you, okay, to get from here to there at the end of the day, the most efficient and effective way to do it is go here, 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 here. And so they run it a lot quicker rather than
a traditional system, yes.
Yeah, okay. That's what it's all about.
Okay, we do have to take a quick break. We're going to line up some of the phone calls from the viewers today. Kim Bolton is President Portfolio Manager, Black Swan Dexteritas, taking your technology stock questions. Here's how to reach us. We're back in a moment. Welcome back. Let's get to an email from Gordon. Gordon says, please ask Kim Bolton for his views on Universal Display Corporation. Tell me a little bit about Universal Display as we pull up that chart. It's a $149 stock. Does that sound about right?
Yep. So it's actually out of New Jersey. What Universal Display does is that they're the ones that actually developed, got the patent for organic light emitting diodes. So, for example, the cell phone. Mm-hmm. This is a organic light emitting diode screen. And so they have the patent on it. A lot of companies around the world use that because it's the brightest, it gives the best definition and so on. And so like Samsung, it produces a lot of screens and phones and so on. Every time they do something like that, Universal Display gets a royalty.
Okay,
and so it's a great business and it's good as long as the patent goes on.
How long would you say they've been around?
Oh, they've been around since the early 90s.
Okay, so they've been around for a while.
Yeah.
Got it. Let's move to our first caller then. Jason's on the line from Toronto with this question. Hi, Jason.
Yes, thanks for taking my call. Kim, I'm asking today about Arista Networks. Do you own it? What are your thoughts of this company? Thank you.
Okay, Arista Networks.
So Arista came out of the fellows that started it, and gosh, this would be 10, 12 years ago, came from Cisco. So it's all into networking.
And it's cloud. It's a cloud company, essentially?
A supplier of hardware for cloud,
okay,
for the hyperscalers. So they do switches and routers. It's all the networking stuff to allow stuff to talk to each other within the cloud. And so they spun out of, the guys left Cisco, very smart, good managers, and they've just built up a tremendous company here that can actually compete to the leader in the networking, which is Cisco. And so everyone, when they want to, they're building out within the cloud and the hyperscalers and so on, they don't want to rely just on Cisco. They have to have a backup, and so Arista is the company. And
do a lot of the people who need the equipment turn to Arista as a second source?
Absolutely, and even as the first source, because their routers and switches and so on. They're always improving, trying to get faster and also energy efficient. And so it's just a constant race.
Got it.
And these days, because the cloud is so popular and with the whole AI revolution, it's also about supply management. And so if they can't get it from Cisco, they go to Arista.
Sounds good. Let's go back to an email then. We have an email from Alan who says, hello, Mr. Bolton. Please give us your thoughts on Uber, very well-known company, Uber. Let me pull up that chart and see where we're at. But what's your overall take on Uber?
I think it's going to be interesting, now that sort of the tariffs have taken a bit of a backseat. Now it's all about the AI revolution, but also about the robotics and therefore the robo-taxis. There's three of them that are sort of in the race, right? There's Uber, there's Waymo, and then there's Tesla. There are a few other ones out there. The one that we particularly like is Waymo, the Google, and then Tesla. And however, you can only buy so many when it comes to the sort of robo-taxi side. Currently, right now, just trading under 90. We have a $115 price target, 12-month price on Uber.
And what's your time period on it?
12 months.
12 months, so a year from now. Okay, so $89.54, a little bit down today for Uber, and that price target for a year. Okay, let's go next to viewer Bill, who writes in, hi, Kim, I'd appreciate your opinion on Celestica. Would you be a buyer at these levels? We'll pull up Celestica in a moment.
This is really a fascinating stock, because if you go back in, first, second week of April, it actually went under $80. And here we are all the way back to 160. We have We don't have it in the fund, but we actually have it in a lot of our separately managed accounts. And Celestica has done a fantastic job in the supply side, very similar to sort of Cisco, Arista, and then it's Celestica that comes in. So we actually currently right now trading at 161, up about $5 today, and we have a 199 price target on that. So what I'd suggest, if you own it, I'd hold on to it. I'd maybe add to it down at around sort of 148 and then put another third on just around 140.
So it dropped during the big drop with everybody else. Just out of curiosity, what are they doing moving forward that you like about Celestica?
What are they doing?
Is there any sort of growth, more growth here? Why do you have the price target you have? What led you to that?
Oh, okay. Well, actually, we had the price target upwards of 185, even when it was down at $80.
Wow, okay.
So, but the reason it went down was because of the tariffs. It's Canadian. It has a lot of clients in the U.S., so the tariffs were going to kick in. And then they're also a big, big supplier to Stargate, Elon's
Yes.
Side of it. And then when Mr. Ford said, you know, Stargate is out here in Ontario, that was an additional, you know, hit
on them. Okay.
And so our price target has been pretty consistent up sort of around this 180 to 200 level, even when it got down to 80. Now you had to have a very good stomach to actually weather that. You know, it's $100. It's so, you know, it's come back here. The better part of 120% in, what, 6 weeks?
Yeah,
it's amazing.
Just over a month,
It's
yeah.
phenomenal.
Okay, so one to watch. We are going to line up more calls for Kim Bolton, President Portfolio Manager of Black Swan Dexteritas. He's taking your technology questions. We're back in a moment. Welcome back, and thanks again for joining us on a market call. Let's go right to your phone calls. Moaz on the line from Vancouver with his question. Hi, Moaz.
Hi, ma'am. My question.
Okay, so you're cutting out. Can you try again?
Yes. My question is on Nvidia.
What is your question? Just generally about the stock?
Yeah, either buy, hold, or a sell.
Got it. Okay, thanks for the question. Nvidia's come back. It's gone even a little higher today, closing in on the 137. I don't think that's seen that level since the big drop in April.
Yeah.
What's your forward look on Nvidia, which was affected by export constrictions to China by Washington, among other things?
However, Johnson Wang seemed to get the ear of Donald Trump, and he's sort of
Gone into Saudi Arabia instead, exactly.
Yeah. So Ned, this has to be in your top 5 holdings in your portfolio, without a doubt, even at 137. And if you've had a couple of chances, really over, I guess, the last year, it was last August, it actually got under 100, and then more recently in April, it just got under 100. If you can ever get it with 100, just under 100, it'll be golden for you. But even here at 137, you know, we have a 12-month price target of 161.40. And that's only going to move up. You know, it's sort of like Nvidia is the king of the graphic processing units, as Apple is to the smartphones. And so it just has to be a core holding of yours. It's sort of similar to Google because they've made a lot of money over the last few years, and now we're coming up on, 2.5 years since November when everything exploded in the AI revolution of 22. They've made a lot of money and placed a lot of sort of other bets that will pay off for them, just like it's paying off for Google with their other bets. I'll give you an example that with the whole quantum computing and the high performance computing that is going on within the hyperscalers and so on, one of the problems is the overheating. And so usually it's air cooled, but Nvidia actually invested in and took about 25 to 30% position in a company called Vertiv that is actually in liquid cooling in the hyperscalers. So they just have a lot more horses in the race other than originally just the GPUs.
Got it. Okay. So Nvidia want to watch. Just out of curiosity, you said 137. Would you still dip in at this point, or would you wait for a bit of a drop since it has come up?
Well, I think if you don't own it,
try to own it.
You should buy a quarter to a third of a position here, and then you should try to pick it up in sort of the 120s, and then, down around 110. And who knows, with all the policy changes, you may get an opportunity to buy it down around 110. I think everyone realizes now if it ever gets close to 100, you just got to back up the truck.
Got it. Okay, let's go back to our phone lines. Mike's on the line today from Guelph. Hi, Mike.
Hi, how are you?
I'm good. How are you?
Great. Thanks for taking my call. Kim, I've got a question on a small hyperscaler. I don't know if you consider it small. It's called CoreWeave. It's been on a bit of a tear lately. Nvidia, I believe, holds a 10% stake in CoreWeave, which I think represents almost 80% of their investment portfolio. I've got an ACB of around $45. I've got a loose trailing stop. My biggest worry is this just going to become another meme stock, or does it actually have potential? I mean, it's got the endorsement of Nvidia, so that in of itself should give credibility. But it's been flying high over the last 3 weeks, and I'm a little, how shall I say, nervous, to say the least. Anyhow, I'll leave it with you. Comments would be greatly appreciated. Thanks.
Thank you. So I'm looking at CoreWeave. It's gone up 155% in the last month alone. So that's the run-up he's talking about. It's not a cheap stock. It's $106 still. Let's talk a little bit about, how much do you know about this hyperscaler?
Well, Mike was just mentioning over the last 3 weeks, I think it only IPO'd about a month ago.
Okay.
But it was a big deal, and it actually was, to a lot of people, sort of that canary in the coal mine, where all's clear for the AI revolution to rise again. And so we don't own it. We'd like to own it, but there's a lot of moving parts. And Mike, remember things like Palantir. Palantir came out in around $20, went all the way up to $40. There's the double, but then it proceeded to go all the way down to the low teens. I think it almost went to $8, and then zoomed all the way up to $130. And what happens on these IPOs is that there are a lot of stock options. People are waiting for that 6 months sort of reprieve. And I think, so Mike, I would treat CoreWeave more as a trade rather than an investment. It will become an investment, but you have to get that supply and demand with the stock options sort of out of the way. And so I wouldn't be surprised to see CoreWeave actually move back down toward the IPO price. But I don't think, Mike, you need to worry about Nvidia treating it as a trade. It's an investment for them.
Got it. Okay, let's take a quick break. When we come back, we're going to take a look at Kim's past picks. We're back in a moment. Welcome back, and thanks again for joining us. We're going to go through some of the past picks from Kim Bolton, who is here and is our guest today. The picks are from almost a year ago, exactly, May 22nd, 2024. And at the time, he chose Cisco Systems on the NASDAQ, 47.43 American at the time, now up to 63.47, so a 34% upside return, a 38% total return. What has been going on with Cisco? Did it get dragged down and sort of had its bounce back now as well?
Well, I'm sure a lot of your listeners probably going well into the fall saying, oh my gosh, I listened to him and I bought Cisco, because it really didn't go anywhere for about the first 6 months. But then they're a networking stock, and they're the king of the networking stocks. So switches and routers, all kinds of software applications and so on that they do, and servicing. And they just hit their stride, especially because of Nvidia just selling out of the Blackwell and the H20s and so on. So they just rode the AI revolution with everything that is going on in that revolution. Everyone needs switches and routers and wireless and data center products and so on. And then the results started to come in. They started beating on the top and the bottom, raising the guidance, even during the tariff time, sort of over, going into January and February and March. So they just hit their stride. And in the past, they were just sort of meeting expectations, and now they're beating expectations.
Got it.
So, but it's pretty fully priced right now, because we have a $70.75 price target, 12-month price.
And they're at about 64, and they've come back from that drop in April completely. So they're at the same level there. Okay, let's go to your next past pick from last year. Western Digital was on your radar last year at 73.54 American, a drop to 51.22, a drop return of 8% and 8% total return as well. Tell me about the company, Western Digital.
Okay, so Western Digital, in its essence, sells storage products and services.
Okay.
So all the way from disk drives to memory solutions and so on. So it's all about storage. It's a pretty competitive spot. We actually sold out of it last fall. And it certainly in the storage side of things, it's a cyclical business, sort of like somewhat like what the chip business used to be, but certainly the storage business is a cyclical business, and you can see it on the chart. So currently trading, just over $50. We don't own it. I don't think we own it anywhere, but we certainly follow it, and it's got a 12-month price target of $58.30.
58 and 30. Okay, got it. Let's go to your last pick then. I want to get that in before the break. Digital Realty at the time was 143.15 American on the New York Stock Exchange. Now 169.47, so an 18% upside return, 22% total return. Tell me about the company. Are you guys still invested here?
Love this company.
Okay.
So there's really sort of two players out there. There's Digital Realty and Equinix. And so a lot of the cloud, data center, hyperscalers use Digital Realty. They are the largest provider of cloud and carrier neutral data centers, co-location and interconnection solutions. So they have over 300 data centers across 25 plus countries. But it's interesting, what sort of holds them back, but it makes it more of a conservative play and not as volatile in sort of the data center space, is because it's a real estate investment trust. So it sort of pays out the royalties, and that's where that other, it was up 18% in the stock, and then there was another 4% over the last year of royalties that actually came out of it. So currently, right now, trading just under 170, and we have a 12-month price target of 185. So if you don't like the real estate investment trust sort of business model, the one you should buy is Equinix, which is just a pure play in a stock.
Got it. Okay, we do have to take a quick break. We're going to line up more phone calls for Kim Bolton. We're back in a moment. Welcome back. Thanks again for joining us. Let's go right to the phone lines. Ritba is on the line from Saskatoon today with a question for Kim. Hi, Ritba. Hello. Okay, we'll give Ritba one more try. Are you there? Okay, so I believe this question is about Synopsis. Let's pull up that line chart and tell me about the company.
Have you ever heard of digital twins?
No.
So it's like you're on a factory floor and you have a machine, a tool and die machine over here, and you're trying to figure out what's wrong with it, or you're trying to run it more efficiently, but you can actually take that machine and put it on your screen, and it becomes a digital twin, and you can sort of tweak it on the screen, and you can do sort of simulations. This is what Synopsis does.
Interesting. Okay.
So it's all sort of about electronic design. Other companies like that would be like Autodesk.
Okay.
Or Cadence. Synopsis is an interesting company because currently right now trading around 513. We actually have a 12-month price target of 618. And the main reason for it is that they're like a $80 billion company, but they're buying a UK design company called Anesis. And so they're going to become sort of the king of the hill, bigger than Cadence or Autodesk. But everyone's sort of waiting for it. And that's why our price target is a heck of a lot higher. You know, it's another $100 on top of this, which is, what, about another 20%, right?
Yeah.
So we like it. And it's just going to be a monster of a company. And it's going to be the go-to company when it comes to electronic design software and so on.
It's just going to take a time getting there.
Yeah.
Got it. All right, let's go back to the phone lines. Eileen's on the line from Montreal. Hi, Eileen.
Hi, good morning. Thank you for taking my call. I'd like to ask Kim about Google Alphabet.
Okay, do you have a specific question or just generally?
Just generally.
Okay, thank you. So let's have a look at Alphabet and see where we are today, up 4.7%, but down over the year, about 3%, so $171. They've got some headwinds. Google has some headwinds, specifically with AI and search engine functions, as well as Washington sort of going after them as a monopoly.
So currently 171.5. We have a 12-month price target to actually get it back just above that 200 at $203. You know, I don't know if any of your listeners, but if you haven't checked out Gemini, which is their AI agent, it's really a leader in that. And the reason it's a leader is because of the search side for the Google search. And a lot of people think, you know, Perplexity and all the other search, ChatGPT, OpenAI, and so on, are going to eat the lunch of Google. But if you actually test out Gemini, you'll see that they've really set the bar quite a bit higher. You know, there's a lot of litigation out there. But the reason we constantly have, you know, Google Amazon, Nvidia, in our top five holdings, is that all of those companies have so many horses in the race. And you're buying Waymo for free. So, everyone prices it off out of Alphabet. What is it? Between 80 and 85% of their revenue comes from ads. Mm-hmm. But then they have all these other horses in the race, which are going to come to fruition. We'll talk about it a little later on some pure plays in quantum. But remember, it was back last November when Google came out and they said that they had actually developed a quantum computer that was so much faster than everything else out there, and they actually showcased it. So they have all these sort of hidden gems out there, and that's, they're the king of the search. They have a backup in Gemini, but then they have all these other bets that they have.
Got it. Let's move on to Don calling from Grand Prairie. Hi, Don.
Hi. Thanks for taking my call, Kim. My question was on Lockheed Martin, and I seen first introduced it when Marilyn Houston was CEO, and I seen the F-35 at the Cold Lake Air Show last summer, and the pilots were out of Salt Lake City, and I seen on 60 Minutes on Sunday that the autonomous fighter jets are out now, and I was wondering how that's going to affect the price of Lockheed Martin, as their price now is about $100 from their peak. Thank you very much.
Thanks for the question, Don. So fighter jets that will go on their own, unpiloted, I guess. I hadn't heard about this. Mm-hmm. But they already have drones. Is there a need for this? Obviously, they think there is if they're building them.
Yeah, and there are a number of, it's for Lockheed, it's not just about the aerospace and the defense side. I think it's particularly about the robotic side, which is the driverless fighter jets and bombers that they're going to have out there, which will mitigate a lot of the pilot errors, I guess, both on the ground and actually in the planes. So, Don, I think you're onto something, but I would also look beyond just sort of the defense and the aerospace side, because I think where the likes of Lockheed and Rockwell, really like Rockwell, because they are especially a leader when it comes to robotics. Lockheed obviously is involved in the robotics side, but that's why I wanted to sort of talk about it. I think it is worthy to actually have a portion of your portfolio, somewhere between 5 and 10% devoted toward robotics. And if you get the aerospace and the defense side on top of it, even better.
Got it. We're going to have to take a quick break. Kim Bolton sticking around to take more of your questions in a moment. Stay tuned. Welcome back. Thanks again for joining us. Let's go to the phone lines. Jack is on the line. He's calling from Cornwall, Ontario. Hi, Jack.
Yes.
Go ahead.
Okay. My question is on QQQ stock.
Okay. Do you have a specific question or just generally want to know about it?
Generally, I want to know what should buy more or keep on going the way I am. So
you're already invested in it. Got it. Okay. Let's take a look at Triple Q Trust. Not a cheap stock, $522. It took that dip in April with everybody else. Kim, do you know the stock well?
Yeah, it's like an ETF.
Okay. But with technology base?
Yeah. So it's basically the NASDAQ 100. Invesco branded it into the Triple Q Trust, and it's just it's a benchmark for a lot of people like me.
And it follows quite closely to
the
that
NASDAQ,
line. Yeah.
NASDAQ
okay.
100. Yeah. extremely liquid. It has, the triple Q to me, when I hear that, Jacques, that I sort of think of it as a trading security.
Okay.
Rather than an investing security. And so if you look at the chart here, 522, and probably the high is upwards of around 575. If you own the triple Q here, just based on the charts and because it's a trading instrument, I would be selling calls, just writing calls against it. And if it starts to, reach for the top actually looks like around 550. So you just write some calls with a strike of around, 530, 535, 540. If you don't want to get taken out of your trade, and if you own the underlying, as it starts to approach the strike price, you just roll the strike price up. And it's great. The triple Q has probably come off the bottom back in April more than 20%. So if you've been riding it for that big rally, and you think it's going to take out the highs, which we think it probably will, I don't know before the end of the year, but there's a lot of water that will go under the bridge before that. Because it's a tradable instrument, you just write some calls against it.
Got it.
You get some premium.
Got it. Let's go back to the phone lines. Get an Anne, who's calling from Scarborough, Ontario. Hi, Anne.
Oh, hello. Kim, I realize that Intel is the Black Swan on Little Lake. Should I add to it or just stay the course? Thank you.
Thanks for the question.
Hi, Anne. Yeah, this is the technology foundry that you love to hate. And so many people have gone through that revolving door of that as the CEO over the last few years, and it's just, you either bring in engineers, technical people, you bring in business people, but it's hard to find someone that actually has both.
Sure.
And so the new fellow that they brought in is more of the engineer side of things. He's doing the right thing, and he has a good management team, and he's cutting out sort of some of the fat. Currently trading around 21. What I've learned over the last year, if you ever see it up around 25, you take a bit of profit. Or even, as you get close to 25, if you don't want to get taken out, just write some calls against it. It will have its day, but it reminds me sort of like IBM, right? IBM was always the one that you always look to sell it rather than buy it. And that's sort of how people feel about Intel. But I think with Mr. Trump in the throne, he will protect Intel pretty carefully.
Got it. Okay, good to know. Let's go to Chad and get in a last call from Saskatoon today. Hi, Chad.
Hi, good morning. Hi, Kim and Barella. My question is on Meta. I got in at around 590. It's had a decent run since then. Unfortunately, I didn't get the pullback when it was the Liberation Day, but I was wondering your take on that. And also, if you could only own one of the two, being Google or Meta, which one would you do? I'll hang up and listen. Thank you.
Okay, thanks for the question. So I'm just looking at how much Meta's come back since the start of the year. So 731-ish in February. Mm-hmm. Now at 642. It dropped down to about 485 in that April flux, but it's climbing back. Do you expect it to continue to climb? And which of the two do you like?
Isn't that, listening to you say that, Marella, it's pretty amazing that you can have volatility like that on a company that has a market cap of $1.6 trillion. It's just phenomenal, but it is very, very widely
Sign
held.
of the times.
Yeah.
Sign of the times.
And it's probably going to be that way. I think we'll have this volatility all the way until the fall. And then the whole Trump administration will get into campaign mode, getting ready for the midterm elections. So with Meta, this is actually, Chad, it's in our top 5 holdings, has been for ages. I would say Google, Amazon, and Meta, we've had it in our top 5 holdings since day one with the fund back in October of 2013.
Okay.
And it's just because, again, sort of like Google, they just have so many horses in the race. It's got to irk Mr. Zuckerberg that Elon Musk was out yesterday saying that he had the biggest supercomputer because Mr. Zuckerberg always pounds the table about that. So currently trading 642. We have a 12-month price target of, and a lot of people do, of $805. So that's a good, it's almost, 28, 29% lift even from this place, from this side. The products of Facebook and Messenger and Instagram and, I come in the subway, I don't know, 60, 70% of the people are watching Instagram.
Yeah, that's what they're doing. So.
And they've learned how to monetize that kind of stuff.
Yeah.
Now, Chad, your question was Google or Meta?
I'm going to ask you to hold that thought.
Okay.
Because we do have to take a quick break.
Okay.
So we'll get to that when we come back. We're going to take a quick break. When we come back, that answer and the next top picks from Kim. Stay tuned. Welcome back. Kim Bolton is here. We just have a quick question to answer before we get to his top picks. The last caller wanted to know, between Meta and Google, where would you go?
I do a 50-50.
There you go. Oh, that was easy enough. Okay, let's get to your new top picks. Quantum computing is the one we will talk about first on the NASDAQ. What do you like about quantum computing?
So you're going to think I'm crazy because I usually come out with large cap technology stocks, maybe even go into mid cap, but these are small cap. And the reason for it is because quantum computing, it may be 3 to 10 years before it becomes mainstream, but the stock market is all about future values.
Sure.
And so this is definitely coming. There's very few pure plays out there. Most people gravitate to like Google and Meta and Amazon and so on that have huge teams involved in quantum computing. But these ones that I'm gonna talk about today are pure plays in different sort of segments of quantum computing. So I'll try to do it as quick, and you can gong me as I go.
Okay, we have about 30 seconds left for this one, and then we've got to move on.
So quantum computing, basically it builds really super smart machines that use light instead of electricity to solve really, really complicated problems. And its pitch is that they're focused on making this tech usable right now by designing low power, room temperature systems that can fit into current setups without massive capex. So it's a $2 billion company, currently trading, around $12, and we have a $15 price target.
For a year from now.
For quantum computing.
Got it. Okay, let's move to your next one, which is DWave Quantum, also out of New York. Tell me a little bit about what they do.
Now, this is a bit bigger, but these 3 firms, Quantum, DWave, and Ionic, which I'll talk about, they're not profitable. So I would, like for us, we would never put more than 2% in each one of these.
Okay.
In either a separately managed account or even in a fund. They're not profitable, but the tsunami's coming. It's not a dream. It's not just a story. It's coming. So DWave was up 32% yesterday. And so we have a price target here of around 25, but it's just a number because they actually came out and they announced that their revenues had actually shot up like 150%. They brought out this thing called an Advantage 2. It actually allows the application of quantum computing. They have defense contractors. They have pharmaceutical companies out there.
So they've got their hands in a number of different things.
Yeah.
Okay, let's get to IonQ.
Okay, IonQ.
Because I've got a minute.
Yep. So in the quantum computing space, they use what's called trapped ion technology, which employs atoms or ions suspended in these electronic fields as qubits. Remember, we were talking about zeros and ones and qubits in between. So right now it's trading right around $35. You can see not many people, but majority of the analysts love these companies because the tsunami is coming.
The tsunami is coming. We'll keep an eye on the tsunami, Kim Bolton, sir. Thank you very much for coming in. Good to see you.
Thanks, Marilla.
We are going to leave it there for Market Call. Thank you for joining us and watching. We'll see you again tomorrow.